The worst stock market crash is coming. If you're an investor, there's a good chance you're aware of the fact that a stock market crash could be on the horizon. In fact, many experts believe that the worst stock market crash in history is imminent. While no one can say for sure when or how severe the crash will be, it's important to be prepared. In this blog post, we'll take a look at some of the signs that a crash is coming, as well as what you can do to protect your investments. Let's get started. Please like, subscribe and turn on the notification button to keep supporting our channel. 1. Introduction: the stock market is on the verge of a crash. The worst stock market crash in history is coming. This is not a drill. This is not a drill. This is not a drill. I repeat, the worst stock market crash in history is coming. This is not a drill. This is not a drill. This is not a drill. I repeat, the worst stock market crash in history is coming. Please take this warning seriously. The stock market is about to collapse, and it will take the economy with it. There are warning signs everywhere. The stock market is overvalued, rising interest rates are starting to choke off economic growth, and corporate debt is at record levels. This is a recipe for disaster. The stock market crash will happen suddenly and without warning. It will be like 2008 on steroids. The Dow Jones Industrial Average could easily plunge by 5,000 points or more in a matter of days. This will be a financial catastrophe of epic proportions. Millions of people will be wiped out. Savings will be decimated. Retirement plans will be obliterated. And yet, most people are completely oblivious to the dangers that are lurking. They think this bull market will just keep going up forever. They are in for a rude awakening. If you are not prepared for this stock market crash, you will be in for a world of hurt. So please, take this warning seriously and start taking steps to protect yourself and your family. 2. Why it's happening: there are several factors that are coming together to create the perfect storm for a stock market crash. We are in the midst of a perfect storm for a stock market crash. Several factors are coming together to create the perfect conditions for a market sell-off. One of the key factors is the increasing level of leverage in the system. Leverage refers to the use of debt to buy assets. The higher the leverage, the higher the potential return from an investment, but also the higher the risk. In the past few years, we've seen a tremendous amount of leverage being created through the use of debt. This has been driven by low interest rates, which have encouraged borrowing. And, it's not just governments and corporations that have been taking on debt. Households have been doing it as well, through the use of credit cards and home equity loans. The other factor that's contributing to the perfect storm is the high level of uncertainty in the world today. There are a number of geopolitical risks that are worrying investors, including the potential for a trade war between the United States and China. In addition, there are concerns about the high level of debt in many developed countries, including the United States. These factors are coming together to create the perfect conditions for a stock market crash. Investors are becoming increasingly worried about the risks in the system, and they are starting to sell their holdings. This selling pressure is likely to continue in the days and weeks ahead, which could send the stock market into a free fall. 3. What you can do. While there's no way to fully protect yourself from a stock market crash, there are things you can do to minimize the damage. No one can predict the future, and that includes crashes in the stock market. But while you can't do anything to stop a crash from happening, there are steps you can take to minimize the damage. Here are some things to keep in mind if you want to protect your portfolio in the event of a stock market crash. 1. Have a diversified portfolio. One of the best ways to protect yourself from a stock market crash is to have a diversified portfolio. This means investing in a variety of different asset classes, such as stocks, bonds, and cash. Diversification ensures that you're not putting all your eggs in one basket. So if one asset class takes a hit, your portfolio as a whole can still weather the storm. 2. Stay invested for the long term. Another key to weathering a stock market crash is to stay invested for the long term. This means not selling your investments when the market takes a dip. Historically, the stock market has always rebounded from crashes. So if you sell your investments when the market is down, you'll miss out on the gains when it eventually recovers. 3. Use dollar cost averaging. If you're still worried about investing in the stock market, dollar cost averaging can be a helpful strategy. With dollar cost averaging, you investing a fixed amount of money into a security or securities at fixed intervals. This helps to smooth out the ups and downs of the market, since you're buying more when prices are low and less when they're high. 4. Have a cash reserve. Another important step to take is to have a cash reserve. This way, if the stock market does crash, you'll have money on hand to cover any immediate expenses. Ideally, your cash reserve should be enough to cover 3 to 6 months of living expenses. This will help you to weather any short-term disruptions in the market. 5. Review your insurance coverage. Lastly, it's important to review your insurance coverage. Make sure you have adequate life, health, and disability insurance. This will help to protect you and your family in the event that you're unable to work due to an injury or illness. While there's no way to completely protect yourself from a stock market crash, following these tips can help to minimize the damage. For conclusion, the best way to prepare for a stock market crash is to diversify your investments and have a plan for what to do if the worst happens. When it comes to preparing for a stock market crash, there is no one-size-fits-all approach. However, there are certain things you can do to help protect your investments and portfolio. The first and most important step is to diversify your investments. This means not putting all your eggs in one basket, so to speak. By diversifying, you spread your risk around and reduce your chances of taking a complete loss should the stock market crash. There are many ways to diversify your investments. One approach is to invest in a variety of different asset classes, such as stocks, bonds, and cash. Another approach is to invest in a mix of different types of stocks, such as large cap, small cap, and international stocks. No matter how you choose to diversify your investments, the key is to make sure you are not overexposed to any one particular asset class or type of stock. In addition to diversifying your investments, you also need to have a plan for what to do if the stock market crashes. This plan should include how you will sell your investments, how you will reinvest your money, and how you will deal with the psychological impact of a stock market crash. By having a plan in place, you will be better prepared to deal with a stock market crash if and when it happens. Even though the stock market has been on a tear lately, don't be fooled, the worst stock market crash is coming. Everyone from experienced investors to first-time stock buyers should be prepared for a substantial dip in the market. So what can you do to protect yourself? First, make sure you have a diversified portfolio. Secondly, don't panic if the market starts to fall. Stay calm and stick to your investment strategy. And finally, don't forget that the stock market always goes in cycles, so don't give up on investing altogether just because there's a downturn. Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.